Markets and the economy are a non-stop PSYOP right now, according to my guest, Melody Wright, and she believes it's game over for the consumer economy as so much of the data being released from official sources is nothing but a complete fabrication, hiding the danger and risk lurking underneath. The political class has also entered a kleptocratic frenzy as they grab their bags before pulling the rug out from underneath the rest of us. We discuss all of this and more. And guys, coming up on June 27th at 1 p.m. Eastern Time, the very first live commodity culture boot camp. Reserve your spot by clicking the link in the description below. And now, let's dive into it. Melody Wright, great to have you back on Commodity Culture. I want to start with your broad overview of markets and the economy because the news cycle obviously moving so fast. There's so much information coming out there. We want to separate the signal from the noise. Could you fill us in on the main trends you're watching right now that you think more people should be focused on?
Sure. So I think the last time we spoke, I probably mentioned this too, but I'm watching narratives and I'm doing it by stepping back, Jesse. I think we've been in this bubble for so long that I don't have any emotion about it anymore. I can just step back and watch what are the headlines, how are they converging, where are they converging, and not getting emotional. But honestly, when I'm thinking about the economy, I look at the bond market. There's a real fight going on in the bond market right now. Rates want to go higher. You see it every day. I watch live pricing, and the 10-year is fighting around this 4 or 5 level. If it goes higher than that, I think things will start to break. So to me, that is the true signal of what's actually going on. It's not, how many times Trump announces a peace deal or this or that. But the economy is on life support. And, I recently was in New Albany, Ohio, where there's a massive data center, park, as well as where they are theoretically building a new Intel plant. And there are 25,000 construction workers on site there, Jesse. So just imagine, and guess what? They're not going to have the power. Meta has a facility there. They're even doing on-site power generation. The power company actually spent years building that out, but they're still going to be short. And so what you're soon going to see, in my opinion, is these data centers will stop and those construction workers will go home, and they are the last thing holding up anyone who is under any illusion that this economy is strong. And so I'm watching these headlines, and what we had last week were about 10 headlines disrupting the AI narrative, talking about Uber, talking about people not getting a return on investment, talking about people being cheaper than AI, which is what we in fintech figured out in 2022. Why it took everybody else a little bit longer, I'm not sure. I have my theory on that. But the economy is being held up by narrative, which is not feeding people. It's not putting gas in their tank. And so, but the top of the K has been largely, kind of insulated, but that's starting to change as well, especially when you're seeing these funds that are getting gated and investments kind of falling apart. So sorry, I said a lot there, but
Yeah, let's get in. We will get into those gated funds and a lot of the stuff you were talking about. One thread I wanted to pull on, though, was about the sovereign debt market. You said you're seeing danger there. We have seen rates rising across the board to levels in many cases not seen since the great financial crisis or the Eurozone debt crisis when it comes to European bonds. Of course, Japan is probably the poster child for rising rates, as it appears the Central Bank of Japan has lost control of their, they were capping interest rates essentially by buying a huge amount of their own sovereign debt. How do you see this all playing out? What would a collapse in that market look like if rates ran too far to the upside on a lot of this sovereign debt?
Well, I mean, that's just not good based on our debt situation. For the housing market specifically, it's already dead. It would be even more dead. But I think the borrowing rate of the world is the 10-year treasury. And if that continues to go higher, then you're going to see more and more distress across the credit markets. They're already in distress, but then we would likely probably have some sort of credit event, which I think is already in the cards as it is. So we could really see rates go much higher from here when many people are expecting them to come down. And I believe, just watching the live pricing, Jesse, it looks like we are intervening in the bond market right now. You can see it every day. It's a fight. It's just a fight. So, and when I say we, likely the market makers are being asked to intervene. So yeah, and I think we talked about this previously. I think we're going to get to a point just due to the interest expense that we're probably going to have to restructure our debt in some way. But yeah, none of this is good. I mean, this, to me, it's funny. I had a friend who tweeted yesterday. He's like, and he showed the 10-year and he's like, this is Trump's boss. And I completely agree with that. If this thing gets over 5, it's the system will crash. I mean, the entire system. And so I think that's what they believe as well. And that's why they're fighting at this 4 or 5 range.
Let's touch on the SpaceX IPO. Very interesting because we seem to be getting more and more disconnected between price and value when it comes to the casino-like mentality of many market participants, which includes fund managers currently in this environment. Now, SpaceX is a company that recorded a $4.2 billion net loss in the most recent quarter, and yet both retail and institutions alike piled into the IPO. It went straight up. Are we in peak bubble territory at this point, or is this just a sign of a new paradigm we're in when it comes to markets? And could this just keep continuing on for much longer than people realize?
Is this the absolute peak? I don't know for sure. I don't know, what's going to happen with the OpenAI, IPO, et cetera. But this certainly feels like the peak, Jesse, because it's just hard to understand how anybody can get this excited about this company and these promises. But it was hard for me to understand how people could get excited about Tesla as well. And, just to see the shenanigans and the promises, I feel like, Musk is he's a great con man, and, whatever we need to get excited about, he sort of is always front running it. And now we're supposed to get excited about space. Well, come on, please. Let's be realistic about this. How we can't even get data centers completed here. How are we going to get them completed in space? I mean, it's ludicrous, Jesse. So if this isn't peak, then I'm going to have to take a vacation for until it is, because I have to tell you, on Friday, the disconnect between what is the reality of everyone that I'm talking to and this IPO is just it's so huge. And everyone I'm talking to is struggling, and prices are going up. Gas, hasn't gone up as much as it probably will, but it's still too much. You're seeing it in the housing market as well. People simply cannot afford to live.
Yeah, I think we need to sort out our own planet before heading into space. And now the narrative being pushed is there's aliens. Ed Dowd posted on X at one point. He was like, nobody's going to care about the aliens unless they're going to drastically lower the unemployment rate at this point.
If they need homes, I might care about them.
Yeah, exactly.
Live in a McMansion, I might care, but otherwise I don't care anymore.
Yeah,
so,
I think
exactly. But that's what I mean about, your first question was such a good one. It's like we are living in nonstop PSYOP of noise. And housing is its own PSYOP, but it's just, everything that can be thrown at the wall is what's happening right now. And I think it is kind of this last desperate attempt to pretend that the economy is not, and I'm not talking just the US economy, the global economy is in serious trouble.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Let's talk a little bit more about AI, because interestingly, the Financial Times recently reported that a report on AI adoption by KPMG made numerous false claims about the use of AI by big organizations, which included UBS, the UK's National Health Service, Swiss Federal Railways, and more. Is this insiders trying to pump their own bags? And with so much of the broad market currently being held up on these AI hopes, and there's many issues, as you had alluded to earlier, how bad could things get if it doesn't turn out to be as revolutionary as it's being promoted as?
Yeah. So the big four have never been all that bright. Anybody that works with them knows this. The big four accounting firms, they make a lot of their money pretending to do audits that they don't really do, and you pay them a lot of money. Were they pumping? They're probably just dumb. But it is, I think there's a lot of pumping out there, and people absolutely know this technology is not where it needs to be. It's just not. It hallucinates all the time. And if you've ever trained models, and I have, this outcome is going to happen, and it takes constant, what I would say, like oil changes or like fixing maintenance to make the model work. And that is pricey and expensive. And, if you can pay someone in India $3 an hour, that's cheaper than this technology. And so, I think that, everyone else in this industry is pumping, like all of these characters are pumping, and they know that it's not there. They absolutely know that. But this could be a spectacular explosion. And everyone is going, because it is really the last thing holding up the economy. When those 25,000 construction workers go home, we're going to be in a seriously bad place. So it's so unfortunate that they've pumped it so much, because it's going to make what comes next even worse.
Yeah, I'm trying to walk through scenarios in my head in terms of the optimistic view of this, in that this continues to go on indefinitely or for many, many more years. And I don't know, AI turns out to suddenly be the most revolutionary tech ever. Or do you think that one of the things that has held up the market until now, and that could continue to do so depending on how it advances, is government intervention? We saw the United States government take a stake in Intel. What's stopping them from starting to directly buy SpaceX, you know what I mean? Or any of these large companies to continue to prop up the market, at least maybe until Trump leaves office?
The American people, and let me explain, there is no issue that is more bipartisan than data centers and AI. No one likes this. No one likes it. And I've driven across this country, as you know, several times, and you will see signs all over this country saying no to data centers. So this is a political bomb. If they decide to invest in something like OpenAI, which I don't believe that's ultimately going to happen, then it's over. And if that's the game, that's the game. Perhaps that is the game. But people are not going to stand for this. They don't want AI. You saw, the guy from Google who got booed at a graduation in Arizona. The kids are much more comfortable with violence than my generation, your generation. So I think that's what's going to stop them, because no one, and these local politicians, even though they aren't at all beholden to us, they will get these phone calls, and they're not going to be able to run on, we're putting government money into AI that's stealing our kids' jobs, because whether that's true or not, which I think that's kind of a cover of what's actually going on. more, if we stopped outsourcing, there'd be plenty of jobs. But I think that's every parent right now is like, my kid can't get a job. My power bill is going up. They're saying I can't, like, what's going on with water? If you're on the West, like, forget about it, So no, I think if they do this, like, it's over, politically, for any politician that backs that. And so if that happens, then it will be the end of his presidency, in my opinion. One way or the other. I don't know how, but one way or the other. And so that's, yeah, I don't see it happening now. I could be totally wrong. I told you a while ago, we were talking, that I've just started doing inverse exercises where I look at the inverse of what's being said. And because that often is actually what happens. And so I've called this meeting in Washington, it could end up being a red wedding. And I said that before OpenAI got the DOJ subpoena. So, I think it could be a red wedding. And if you're not a Game of Thrones fan, that just means you show up thinking you're you're to something great, and you get taken out instead. So.
Last time I had you on the show, or actually the first time I had you on the show back in January, you said the consumer is dead. Now, we've talked a lot already about this K-shaped economy, but I wonder what the main statistics you're looking at right now are to gauge the overall health or lack thereof in the consumer economy, and the signals that you're picking up from that.
Well, yeah. So you're seeing delinquency rise, in auto, credit cards, student loans, and they're lying about buy now, pay later. I know that delinquency is way worse. And now you've got mortgage delinquency joining the party, and that is the biggest that is, when you look at the debt out there, it's all mortgage. And what I've been seeing, so I've been watching the government subprime for a long time, FHA, which has been in serious distress since 2023, but there was intervention that has now mainly ended. So we're watching this delinquency rise, and it's going to get much worse by the end of the year and Q1 of next year. But what I'm seeing that's very concerning, Jesse, is in the prime books. So that's Fannie Mae, Freddie Mac. That's your credit score should be over 750. We are now in month 3 of increases in early stage delinquency, which should not be happening in this season. Delinquency has seasons. It peaks in December because of Christmas. It then improves through the spring because of tax refunds, which they were supposed to be much larger this year, as well as bonus payouts. But we're seeing delinquency non-seasonally in the prime books. Many people believe that the last crisis was about the subprime. It became a foreclosure crisis when it hit the prime borrowers after the kind of credit event. So, I'm mainly watching delinquency. Also, I watch, retail sales, things like this, which have, if you look at them on a real basis, units have gone nowhere for years. So, and watching consumer sentiment, which, came up a little bit in the last reading, but it's been at its historic lows. So yeah, they're even more dead. Because the increases in gas prices it's closed the chapter, basically.
Let's turn to the housing market, your main area of expertise. You've been posting a ton of data regularly on X and your Substack. What are the main data points you think are most relevant today when it comes to real estate? And how do you see the market playing out for the remainder of 2026?
Well, I think the most relevant data points, our point is about the data, which is it's just wrong. And I've now spent years assuming positive intent, diving into this data, crisscrossing the country, seeing with my own eyes that the data isn't matching what's out there. And I just caught Redfin restating pricing and sales data back to 2012, and they won't return my calls, or they won't tell me why. But it was so bad. And in March, so put it this way, in their old methodology, March of 2026, the median home price was, I think, 440, 420. When they restated it, Jesse, it was 390. massive difference. And, you know, the census itself has also revised 5 years of new home sales information and cut that price high, 30,000. So what I'm saying is you can watch the data, but the data is not going to the data is so inaccurate. And I now feel very confident about that. But what you're seeing is price cuts are coming. You're seeing inventory grow. You're seeing sales slow down in the Northeast and the Midwest. The Northeast, everybody thinks is untouchable. What they don't understand are the demographics. And Boston, particularly, is about to turn. Their inventory is up 50% year over year. The Midwest was the last speculator holdout because of those data centers, because of all that excitement around that. They're now growing inventory in many areas in the Midwest, including Indianapolis, Kansas City, Minneapolis, have year-over-year sales price declines. So we are gearing up to what I say to people is just use your own. What's the relevant data? Can you afford that house? No, that's the relevant data. Don't overstretch yourself. Say no to debt slavery. But, you know, I stop listening to the shillers because these data providers are trying to sell you something, and just use your own noggin, which says, I can't afford that home, or I can. And I'm not talking about the payment, because that's what payment has been what we're all about. But as we see, that means high debt to income levels. And the minute somebody loses a job, it's game over. I'm talking about, can you afford the house? And if your income is not, so basically you could take your income times 3, and that's the amount of house you can afford. That's the only data you need. I sounded kind of passionate about that. Sorry, but
No, that's great, because one point that really hit me there is the obfuscation of data, the lies that are coming out of the data reporters, and the lies that have been coming out from the highest levels of government at this point. It just feels like everything is an illusion waiting to crumble. At what point do you see that narrative versus reality coming to fruition? Because it just seems like everybody's intent on lying about everything right until the absolute bitter end. I guess the hope is, I mean, we're in kind of a kleptocratic phase of government where it's kind of like, let's do insider trading. Let's just take as much as we can. Yeah, let's loot everything before it all collapses. Is that the vibe you're getting? And how do you see that clash between narrative and reality playing out?
It's definitely the vibe I'm getting. And so this could be a slow, long slog, or it could be sudden, you know, what's going to happen in the housing market. Right now, you've got, you know, more sellers than buyers. You've got people rage delisting when they can't get the price that they want, and they think they have the time, Jesse. And it's very bizarre to me. The mainstream media has done the boomer generation no service at all. But that they believe. I mean, they lived through the crisis. They lived through that, but they are so convinced about this inventory shortage that they think they have all the time in the world. So what could really speed things up is if we do get some sort of credit event, if we do get a stock market correction, then awareness is going to happen rather quickly. Otherwise, it's just going to be this slog that it's been for the past 3 years, where first you had I track 86 markets. First you had like 5 markets year over year declines, then it's 15. And now we're at, of my 80 markets, 33 have year over year price declines. And that's not just in the Sun Belt, that's all over the country. And so it could go real slow, but it's going to be this narrative busting that has to happen, because it's got a stronghold on everyone, especially those that own the most of their homes. And I think, when it's going to break on the Northeast is when they wake up to their demographics and realize that, there's a lot of boomer ownership in the Northeast. And, one reason it takes some time to see it is that probate takes a long time in many places. Like, I just went to an auction with a friend. That house had been in probate for 3 years. So all of this has just been slow rolling, but it's going to pick up speed very, very soon here, especially I think another thing that could crack the narrative, Jesse, would be those increased foreclosures. Like that's going to wake people up. And we'll probably get there in Q4 or Q1. This fall is setting up at the same time. Sorry for this long answer, but at the same time in commercial real estate, everybody's talked about the debt maturity wall, but what people didn't realize is that even with that debt maturity wall, there was still extension options. Well, you now have the largest hard debt maturity wall hitting that we've ever seen, and it's not hitting in Q1 and Q2. It's Q3 and Q4. So right now, the fall looks like it's going to be one spectacular mess. And I think that's also where we're really going to start feeling what's going on in the Middle East. Like, even if it's over, we still have much to experience from this crisis.
Some great thoughts. And don't worry about long answers. Grant Williams once gave a 26-minute answer on this program. We haven't even reached the 26-minute mark yet. So those are rookie numbers. You got to pump them up. Now, you reposted a tweet on X recently by Phil Back talking about one of Blackstone's gated private credit funds and how investors had been given fair warning on the risk but chose to ignore them. He ended with a very important line: make risk management and due diligence great again. So I'd love you to shine some light on the fiasco currently underway in private credit markets. And do you think we will I think we will have to at some point eventually re-enter a world where risk management and due diligence become the focus again for sound investment?
Yeah, and I particularly retweeted that because Phil did a huge investigation into Blackstone. If anybody hasn't read that, I highly recommend it. He had threats, like all kinds of stuff for diving into Blackstone. I know that wasn't the point of the question, but I just want to mention that because he wrote this article probably 2 years ago. People might also remember it was the VP of real estate at the real estate investment trust that got murdered in New York. So this Blackstone has been hiding so much of this losses. They first gated in 2022, Jesse. And so we have been living in a lie for a very long time around real estate. But yes, I love that quote because my whole career was about due diligence and risk management. And what you've got in private credit is you've got people that just, again, they got overexcited and they weren't around. They didn't learn the hard lessons. They didn't learn them for themselves. And so they went crazy. And you can I'm looking at these deals. You can go look at Blue Owl's list of investments and you just shake your head. It's not just software companies. They got into, real estate. They got into, all sorts of things. And so, and they didn't look. And not only was it private credit, I have been digging into Freddie Mac multifamily securitizations, Jesse. And what I'm finding there, you would not actually believe. And I'm on one story right now that I think could be pretty damning to Freddie Mac, but the underwriting wasn't there, and they use these automated underwriting systems, and they also, the way it works is you have a whole bunch of little lenders. Then they'll send it to a big lender, and that big lender is supposed to look at all that stuff before they send it off to Freddie Mac. And then Freddie Mac's supposed to do his due diligence. You can tell none of that was happening. None of it. And so, yeah, make it great again. And I do think we'll have to get there because what's been happening, there's fraud at every single level in ways that I can't even believe because of how hard we worked after the crisis to try to make sure that certain things didn't happen again, but they just got worse.
It seems like fraud, abuse, Ponzi schemes, corruption, malfeasance are just becoming so prevalent and in your face. Yeah.
Yeah.
Because now you've got everybody from the highest level of world leaders down to, I don't know, people running fake businesses in the Somalians or, that whole story broke.
Yeah,
you've got everybody. Yeah, right.
Everybody. Yeah. And what I'm looking, and, my pal Travis from Real Estate Mindset, he's been going into these little local communities around these fraudulent bonds and just calling these people out. And you're seeing this happen at, that American Rescue Plan Act money made everybody feel like they were going to be rich forever, and they did some crazy things. And we are going to have to pay for that, unfortunately.
I want to talk about the war in Iran because last time we did discuss its impact on markets. Now, the latest development appears to be that peace is almost within reach for the 20th time or so since this conflict began. Now, notable that this seems to be a bit more of an official announcement as opposed to Trump just tweeting it. Apparently, there's been some input from the Iranian side that indicates there is a deal on the table that they are considering. However, of course, the wild card remains Israel might then continue their campaign, which Iran is against, and that could throw a whole wrench in the thing. And then people say it's those damn Israelis again, when I think actually America knows what they're doing. That's a whole other piece of the puzzle to potentially discuss. But for now, I'm wondering, because we've now seen markets rise, of course, here on Monday on hopes of peace. Oil has now gone down, which is bizarre because even if peace were declared today, the effects of the current closure up until now of the Strait of Hormuz, the destruction of the Ras Laffan natural gas fields, the Pars gas fields in Qatar as well, Qatar Energy declaring force majeure on their all of these things are still in play for energy markets. This whole war feels like one big insider trading exercise. I wonder what your thoughts are on that, and just how you see things developing from here.
Yeah, things aren't what they seem, right? And everyone, if you don't know what the fog of war is, look it up. We are in the fog of war. We have no idea what's going on right now. All you can look at are the actions. And, personally, what it felt like is Iran was invested in the SpaceX IPO. I mean, why wouldn't they be? It's the biggest game in town. So they had as much vested interest, more than likely, to pump that on Friday. And this is, from my understanding, this is a memorandum of understanding about a 60-day ceasefire. This isn't even an actual agreement. I think this is all just kayfabe, Jesse. I mean, I want this war to end, don't get me wrong. But when the ships start moving home, that's when you know it's going to be over. Nothing else matters. Nothing else matters. So just watch that. And yeah, the markets are being manipulated. It feels like what you said earlier in the interview. They are looting the system. They understand what's coming. And this is the last gasp. And, we, regular folks are going to be exit liquidity for all of these titans and oligarchs. And so, yeah, I have a feeling if you're a smart financial manager and why wouldn't, Iran be participating in that IPO in some way? And if they know, you'd have to be pretty dumb not to know, because we now have a pattern. We've seen what the pattern has been established. The announcement is made, the markets go up. So why not? Why not play this game, this casino game? And they probably did. And so on that, they came together. So that's honestly what I feel. And it's not over. I don't think it's over. I mean, immediately we hear about Israel shooting some driver in Lebanon, so it's like, okay. And immediately we get the narrative of, oh, Israel's really mad. There's no one in the IDF that wants this. It's like immediately. And like you, I think that's kayfabe. Like, we'll blame it on Israel, but in reality, we're all in. It's all of our assets over there. It's ours. So till they come home, I don't care what anybody says, because that's when we'll know.
Yeah. And of course, the classic Trump calling Netanyahu and calling him a crazy bastard. And I can't believe you're doing this. This is all fake, guys. And, inevitably, Israel will be painted as ruining the peace deal. Trump will say, I'm disappointed. And I had a sternly worded conversation with him. I wrote him a very strong letter. Hopefully it won't happen again. I just get the sinking
strongly
suspicion.
Worded email.
Yeah.
It's a strongly worded email. Strongly worded text. Yeah.
Exactly.
Mm-hmm.
Exactly. I just have a sinking suspicion that the world's leaders are all part of the same club, and they're all laughing and making insider trades at the expense of the rest of us. I don't know what other way to put it at this point, but Always love talking with you, Melody. Tell us about the M3 Melody Substack and anywhere else people can follow your work online.
Sure. Yeah. So I do my blog newsletter, whatever you want to call it there, my articles, 3 to 4 a month, M3 Melody Substack. And I encourage everyone to also just sign up for the free version. I put a ton of data in the free version. I give you all the tools, and I talk about not just housing, but the economy and AI. I have a tech background as well. So check that out. And then on X Twitter, M3_Melody.
Great. I'll put links to both of those in the description below. Melody, always love chatting with you. Thanks so much for coming on the show.
Thank you for having me, Jesse. I love it as well.
Thank you for joining us today. This episode is brought to you by ARC Silver, Gold, Osmium. They have some great prices on silver bullion products right now. They are on your screen. These are subject to change, and well supplies last. So reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him that Commodity Culture sent you. And of course, the Commodity Culture Bootcamp, the first one live, is coming up June 27th at 1 p.m. Eastern Time. I'm opening up my portfolio A to Z, discussing the framework through which I view the commodity space, doing a Q&A, and much more. Sign up at join.jesseday.ca. Use the link in the description, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.